That was an NFT photo? I didn't actually realize that. That was an NFT photo? Whoa, echo. Hold on here, fuckers. All right, good morning, everybody. Hey, little gap down in the market. And it's like kind of the huge. If this was like maybe day 3 or 4, I'd say let's try to, let's try to long this gap down. I don't know if that's the easy play right now. Like theoretically, you gap down that much, like, that has been the play, but we've actually been in the market, like we've been bleeding off quite a bit, even on gap downs. We just have to kind of let it play out. Anytime we've had a gap down, we've had to the market meanders a little bit. So let's take, just an example from a couple of days ago. So we just have a frame of reference on, right? Like a frame of reference on what kind of goes down. So like you can see here, right? The market gap down like 2% that day or 1%, whatever this fucking thing is, right? And then at the open, it was like, quick pop, little fake ORB, quick pop, fake, right, till it all tightens up. And then you got kind of like that move down. And it was like, if you remember, like, it was like a little bit tricky at the open, right? Like we were like, like you want to kind of short this breakdown here, but because of the gap down, it needs to like tighten up and congeal a little bit. And then see, as you start to tighten up, then it takes it down. And so that's very, very important on when you get a gap down of that size, because that open can be really tricky. Like if you don't just reverse back and fill the gap right away with some gusto, then you can kind of meander around for a little bit and it'll test your patience. If you remember this day, we were like, oh, fuck, the market's dead, right? But, it's only because we gave it 10, 15 minutes and then it sped up, and so that's something to just be kind of a little bit mindful of. And we have been seeing that kind of action a little bit at the open sometimes where, the trends don't set necessarily right away, and then you have to kind of meander, even something like yesterday, right? You were really at the open, right? So this is your first, half hour. It wasn't really till about the first hour of the day. You start to you were just kind of pitty pattering around and you got to almost trade the range, right? And it was a little bit all over the place. But then, and when the trend sets, that's when you really need to hammer, whether that's the upside or downside. When that trend sets, now we need to start doing it, and getting this thing back down. So just work to the wise today, with the gap, it may be a little bit tricky at the open, it's not, we are oversold, but we are not necessarily so extended where this bounce has to hold today or anything like that. So I think that'll be important too, is, we don't have to bounce today, but we are getting oversold. And really there's you're not really seeing anything in the tape yet of signs of even a bid or a reversal. So I think that gets a little bit tricky. Yes, if we were in a bull market, we were down 2, 3, 4 days and we were oversold, we would we would bounce. Today will be a little bit more tricky because a lot of these things are still just coming out of some ranges here. And so we'll have to be a little bit mindful. You can see the stochastics on this are at 8. So it is at an extreme level, but we may chop around a little bit. You could even theoretically, because yesterday was a trend day, theoretically you could get an inside day or something like that too. And that would kind of relieve some of the oversold condition without necessarily bouncing. So we'll have to keep an eye on those things. In the meantime, there's been more than enough range. When you have this much range in the market, it doesn't really matter, your guesstimate on what the market's going to do. At some point, the trend sets, and then you can go in and you can really hammer it because, in reality, as day traders, what are you really trying to do, right? You're just trying to, catch some chunks of these, and, you catch a chunk of this here, wherever it might be. Then you're going to be able to have a pretty damn good day anyway. So I wouldn't worry too much about it. Let's take a look, see if we got any earnings plays. This earnings season has been a little bit dry on the upside. You just haven't seen any earnings breakouts or anything like that. But on the downside, you haven't seen really, really good follow through on quite a few things. Hey, Dina. Hey, Jason. What's going on? So we'll keep an eye on those things. Hold on. Where's my hat? we'll keep an eye on these things. Let's see if we got any good earnings out, and we'll kind of go from there. On the other side, we are probably even due for a bounce in crypto and stuff like that too. But I wouldn't play any of these. Like, see, like, all right, so this one is like couping Q1 loss narrows, blah, 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 revenue rises, blah, blah, blah. But you're like kind of gapping up on this thing into resistance, like in this market. So for example, like if this was right 7 months ago, 8 months ago, this would be like the prime time earnings breakout to actually play, because you would actually have, okay, this stock's got earnings out, it's catching some upgrades, like it'll follow through. That's not the market we're in right now. Like these kind of gap ups have been getting faded quite a bit. The bumbler. All right, the bumbler. So you got earnings on this one too. Bumble earnings drop, sales rise, revenue outlook in line with consensus. Right. So you got a 10% pop in this, and you can see like some of these things have just been pummeled. Like this thing was like $90. So in reality, we think like, okay, how much, lower can they go? Well, oftentimes quite a bit. So like this is another stock. Like if this ends up catching a bid, like it can go, like this can go, but we would really need like kind of probably a full-blown market reversal at that point to kind of get these things going, because we've been seeing like these gaps like in Twilio and stuff. They've been just getting faded the fuck off, every single time. Junk. See, this is SQQ. This is the ETF. Hey, Chris, how you doing, brother? Junk. All right, well, let's get into this. There's nothing really that juicy on the long side in terms of earnings. Let's go in here. Some bros, right? So this was, this was a heater for like a hot second. And now, like, right, you've got this like big breakdown here. The interesting that's happening on some of these earnings bombs, like is that they're gapping down so much, they're not necessarily even giving you a chance to like they're not even giving you a chance to kind of like roll into this thing, right? So the SSR is going to be on this bad boy. This is like a primetime candidate to kind of like fizzle out. So, but it's down quite a bit. So what I mean by that, like fizzle out, is you can't short something that's down at the open like 36%. But what you'll often see is like, like for example, like coin. What you'll often see, and this is kind of the action you want to, this is the exact setup that you'd want to do. So like, coin also gapped down 25, 30% or whatever this was at the open yesterday. And then like, you can see like how it squeezes up from like 52 to 61, because the SSR will be on it for, the open. So, you'll have short sale restriction on shorting it on the bid. So like they'll squeeze up with just a minimal amount of buying. But at some point, like what it will do is start to fizzle out, meaning, right, like it'll just start to lose steam. And when it starts to break under the VWAP and you start to like meander around there, then at some point, like you'll get that kind of like end of day fade or lunchtime fade, where you'll catch like, you'll catch your cheese. And you only need to make a few points here and there, right? Like when you're talking about trading, swing trading, you don't want to do in this market. Like you don't want to hold anything overnight, especially to the long side. You don't want to buy anything because it's cheap. And in general, because of the range of the market, like you can really kind of rip like swing trading gains in your account doing day trading, but you only need a few points here, a few points there, and they stack up by the end of the day, and you'll start ripping some big percentages if you can nail them right. So that's like the setup you probably want to do on this bros. And same thing with BYND. Like these are probably going to, squeeze up a little bit to open, but we don't buy these things because they are turds, right? Like Dutch Bros sounds like an awesome name, but it also sounds, right, like two brothers that fart in their girlfriend's beds while they sleep and Dutch oven them. That's not a fun thing to do. That's not nice in a recession, but I like that thing. The Dutch oven, let's add it. BYND, same type of deal, down 23%. I mean, this thing is probably a big gelatinous turd at this point too. Updated VME post wider than expected loss. Sales also lag consensus. So that's never like a good, those aren't good tag words for the most part. SSR will be on this thing too. Let's take a look over here. What's the date here? Let's see if this thing pops up at the open. Like this will be the same, right? This will be the same type of thing here. Today is, okay. Damn, it's already May 12th, huh? Let's add this to the list. It's down 23%. Can't hit it at the open. let it squeeze higher, then we'll come in and we'll add that thing in. Veru turd, boiled turd, coin. This could be a day 2 play, even though it's getting super long in the tooth, like it was like $131. It had earnings out yesterday. I mean, this very well, could have a day 2 play. Now you can't chase an 8% gap on this thing. If you do get like some kind of full blown, reversal in Bitcoin, you could turn this into a rubber band. You could turn this into a rubber band long. If you're watching, if the QQQs and the price of Bitcoin start to like ramp back up today, like maybe we do get a little bit of a bounce, then, you'll have the SSR on this. This is probably due for a little bit of a dead cat bounce. Their earnings must have been shit for the most part, but that's probably something, a day 2 that we want to be keeping an eye on. Let's add that. This is like a Taiwan casino. Junk. Stay away from all these Bitcoin stocks. It's easier to just short the cryptocurrencies than ever try to play these Bitcoin stocks. That Mara Riot, these things are just awful. I mean, they're like the terrible traders, and they have no range left for the most part. FNGU, junk. So General Motor, double downgrade. Like this looks like probably a little bit of a rollover too. GM's like a little too slow for me, but this is running on downgrades. This is probably another one. Like if it squeezes up at the open, you could fizzle it out. Not my particular flavor though. These little automakers, like they move enough, like, but they're just not, they don't have that range that I really like. One thing, like if you notice, like every stock looks really nasty right now. Those are the moments where you do start to see like a, potential squeeze in the market, so that is something to be mindful of. Like when everything looks nasty, there is a possibility that, like some type of bounce can start. That bounce will be short-lived anyways. This is going to be a long year, but we are like into like some, interesting spots where when it all is leaning one way, then that's something we have to be mindful. So if you look here, like the T2108 indicator, so this is what market breadth is essentially, right? Ratios of what's happening underneath the hood of the market, meaning like your market index is like 100 stocks, right? So like your QQQ is 100 stocks. So like that's not the stock market, right? There's 8,000, 9,000 stocks, ETFs, so on and so forth. So market breadth will help you understand like what's happening underneath the hood of the market, and also like how to like read extreme levels. So like, for example, right, like in January and December, right, the market indexes were hanging out at highs, right? Like if you looked at the QQQs in, right, like in, right, December, January, you were at highs here. But the bear market actually started in November. But the market was going up. But this bear market officially started in November. Every stock was getting pummeled during this time, except like Tesla, Facebook, and Microsoft. And so they're holding up the market. So what market breadth is essentially telling you is what's underneath the hood of the market. So we are getting into these like really extreme levels here where like bounces can start. So T2107 is percentages of stocks above its 200-day moving average. Like your 200-day moving average is like your most long-term moving average. Like you're getting into these extreme levels, but also these are like levels that we've seen like where bounces in the market have also started. So if you look here, like in March and February, right? And so we started to see like, right, in March, we saw a little bit of a bounce here, right? In February, we had a short-lived bounce, but we didn't, it was a nice 3-day squeeze. When you get these like 2-3 day squeezes, a lot of these stocks will pop up like 30-40%. So that is probably something that we have to keep signs on a short-term basis for if we start to see something materializing, some bid that comes in the market, right? Like for now, like when stocks pop, they're like immediately getting faded off, right? So if we start to see, right, like some of the dips holding intraday and they starting to build, then that'll give us an idea like, hey, this could start to happen. T2108, so that's your percent stocks over your 40-day. this is like, something we've used for like years and years and years. But like if you go in like, so anything under 20 is like considered like an extreme level, and anything under 20 is like been an extreme level. And that's like historically, we used to only get like 1 or 2 opportunities a year where you would get it even under 20. Like see, like in 2020, like there was like, besides after the coronavirus, right? Like you got back down there like one time. In 2021, we just had like one instance where you even got to 20. You never got under the 10s. And then every previous year, like you've been under this 20 has been like a big bounce spot. You rarely get into the 10s. Like end of 2019 or end of 2018, we got into the 4s. Otherwise, 20 has always been kind of like the spot where bounces materialize. So like now that we're getting into like the straight kind of runway zone, that'll be something interesting to just watch too, because it is like coming, we just don't know when and how long it lasts, right? Like it's coming, but we don't know how long it's going to last. Is it just going to be a 1 or 2 day thing? Or is it going to be something, right, that like is a little bit more meaningful, like we last like, a week or 2. So that'll be something to keep an eye on. Let's go into some of just our regular watch list that we probably need. If we need any shorts, we can short this AMD under this level over here. That's got kind of a nice spot where it could flush out. If you're looking at like maybe, on a longer term time frame, probably 85, 86, something like that. That's probably a good spot. Hey guys, work to the wise side. Stay away from small cap stocks, penny stocks in this kind of market too. You don't need it because there's like so much range in the market in general. Like if you see like the ATR on AMD is like $6, the ATR on NVIDIA is $13, average true range. So you could be trading, 100, 200 shares of this stuff even and still like have yourself, some good old fashioned Christian fun. But on the other side of things, over time, you'll be able to scale that up and trade, 2,000, 3,000, 4,000 shares of this. And then, right, you can make as much money as you need. We just got to kind of build it up to that point. You'll get more consistency if you stay away from, certain things. So let's add AMD to the short list. It does have a lot of relative strength. Like it tends like, if you notice when the market does like hold up, it tends to bounce the most aggressively. So like yesterday, like this was up like 3, 4, 5% at the open, and the video was like, was trailing it by a half. So keep that in mind. If we end up seeing some type of bounce happen, then, this will actually probably be the relative strength one. Oh. Good. Let me look at NVAX and mRNA, Rhonda. Man, you're looking good with that mustache. Your wife lets you run around like that? It's amazing. Yeah. I may have to bring one out myself. Yes, so this NVAX does have a level over here that you could take down. Like it had pretty sick range yesterday. That's a pretty good eye right there. Like you just have like a very clean breakdown setup. It's nice like when you can just trade around levels, meaning like, hey, if you have a line in the sand where like, okay, this is good, this is bad, that kind of at least gives you a little bit of structure around your trade. I think that's probably going to be something you can use. The margin sucks on this thing. Like, fucking, I don't know if it's just E-Trade because Ameritrade's a lot better on it, but man, on E-Trade, they let you like, if you have like 100 grand in your account, like they let you take like 200 shares of this. That's fucking, it is a turd. mRNA also has, right, a big breakdown level. So these are like stocks that could just start speeding up if they hang out below those levels. So keep both of those on your watch list if you need shorts, and AMD. I think those will be just fine. Hey, Abder, what's up, brother? How are you? What's up with you? Dad joke. Okay, let's go back into these gappers here real quick. Man, Bumbler. If we need some longs and the market holds, this app, Couping, Bumble, should work. All right. Now, basically, any of these tech stocks, NVIDIA, AMD, Roblox, Facebook, they can all be played both ways because they're also oversold right now. So you'll be able to play them both ways. in this market, like everything is just, index dependent anyways. So we'll keep an eye on these. But I think if we do get the long in the market at some point, we could take any of those. So when there's like, we're kind of like in a weird spot here because we're oversold, but the tape stinks. So what that means is like you have long-term trend down, right? Short-term trends, like we're not seeing any signs of buying yet, but we are like really, really oversold. So those are like the trickiest spots. Like the easiest spots in a bear market are like right after like a consolidation or something like that, when you're not oversold, and then you get all this room to the downside. But now like all these things have dropped off like 30, 40, 50% in the last few days. So like you're always in the danger of getting squeezed. So like you don't have like as much reward to risk at this particular spot on the short side. So you have to be careful, but in the end, we have to short it. Everything, your hold time should not be very long in this type of market. And at the open, trade a little bit smaller, till you see the trend set and then go on and hammer it. You could definitely, trade Tesla too. I have no luck trading this thing. Like it's always been a rundy for me. Dun, 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 dun. Good. All right. Now, let's go have some fun today. I'll be in the Discord room. Let's make quick work out of this. I'd go with let's try to leave at noon. It's a nice day out. I try to get on the boat today. Get the fuck out of here. Guys, trade well, trade fast. You know how it goes. All right, peace.